There's been renting a scattered site single family home has been a popular option for a long time. And there's been a notion of consolidation and aggregation in the industry, institutions such as Blackstone, Invitation Homes, et cetera. But the reality is that the institutions, they only own 3% of all single family rentals. So it's a very, very small margin, and it's a very fractured margin or market. So the rest of the market is owned by mom and pop, quote unquote, owners that own 10 or less homes. And as David mentioned, that means there's no institutional property management, there's no on-site management. It's typically older homes and they often have deferred maintenance. So it really opens up an opportunity to build BTR cheaper than you can buy homes in communities that offer the same amenities as your typical apartment would.
And then generally speaking, and this kind of speaks to that housing shortage, this is both for rental and for sale, is that permitting generally has fallen, especially for rental, where interest rates, have increased. You're just seeing what was increased supply is now getting absorbed. And over the last couple of years, there's actually been a reduction in permitting. And so we feel that now is really the right time to build. Being an OZ fund, we're less focused on sort of short term and really looking at, are we selecting the right sites in the right locations in the right MSAs? But I think one of the positive things is there is projected to be considerable rent growth over the next few years. Sources like John Burns, who are experts in the space, are sort of predicting that based off the lack of supply. And so the good news is that there's a lot of really good short-term tailwinds that are kind of leading us. But over the long term, the important thing, or one of the important things to focus on, is sort of the growth of a market and kind of what is that going to look like in 7 to 10 years. Another thing that's interesting, and this kind of speaks to the stickiness of the product, is we're building generally larger units than you get in apartments. So your 3-bedroom townhome is going to be more sticky to a tenant. If you have families moving in, obviously moving every other year with kids in and out of a house is not really that practical. So what build for rent experiences versus typical apartments is longer lease terms, meaning you might do a 1-year lease, but generally speaking, the occupancy of a tenant is going to be probably closer to 3 years plus, and the retention rate is much higher. And because it's a more of an emerging asset class, it's not as established as multifamily. When you have a fully amenitized community, it becomes very attractive. And generally speaking, tenants don't leave, and there's more demand to be in that community. And so when you see this chart, just across the country, you're looking at just extremely high occupancy levels across the asset class, which obviously bodes very well. And then same kind of comment, just re-emphasizing from an affordability standpoint, it's just becoming more and more unaffordable to purchase. And so the renter by choice, I think, becomes a lot more relevant. What you're also seeing in a lot of these markets that are high growth, where there's a lot of job growth, which is what we target, you have a lot of people moving in who, even if they intend to buy, may rent for a period of time while they establish themselves. And then this really just details kind of the depth of the market from an institutional standpoint. So even though we're not thinking about a sale in the short term, you're really seeing kind of every major blue chip institutional investor who has committed to this asset class. And anecdotally, we're on calls with a lot of these investors, and they're specifically raising funds, billions and billions of dollars to target this asset class specifically. And this is maybe one of 3 asset classes that are part of a theme in a given fund. So it's interesting in that you're just seeing some of the largest investors and managers in the world flock to the space and making very large investments into either operators or portfolios. And we're seeing a lot of these communities trade at a premium. So again, what's interesting is it's emerging enough where we really see a lot of opportunity and growth in the space, but it's established in that it's not pioneering, and you have a lot of support from the general institutional investment community.